Well, it is Friday, and that means it's time to talk dollars and cents, and everybody certainly has their eyes on the economy these days. Davis Garrison III from Preservation Financial Group joining us this morning to continue to try to make sense of what we are seeing on a national and really worldwide scale. Davis, thanks so much for joining us.
Thanks for having me, Amy.
Well, first of all, let's talk a little bit about the numbers and the trends and what you're continuing to see and follow.
What we're seeing right now is a big question mark, and it revolves totally around the COVID-19 virus. Tennessee is an example. I was looking this morning. It's one of 13 states that is potentially a red flag, a red zone. Whatever you want to call it, but it is, and I saw last night the numbers for Washington County, Sullivan County, Carter County, that type of thing, and they are absolutely out the roof. And so this type of situation has to impact the economy going forward. We were disappointed last week with the unemployment numbers, and we're sitting on 30 million people out of work right now, so it has to impact the market. And what I prepared for you all today is the mathematics. The title of it is The Mathematics of Losing Money. And any of your viewers that would like a copy of this, I'd be more than happy. Just let me know, email me, whatever, and I'll get this to you. But from 10 to 50%, if you have a 10% loss in the market, which we've been there recently, it requires an 11.1% return just to get back to even. 15% loss, it requires a 17.7% return to get back to even. 20% loss requires a 25% return to get back from even to even. 25%, 33.3%, all the way down to 50%, and we've discussed this before. If you lose 50% in the market, like in 2007, 2008, 2009, when the market was down 57%. If you lose 50%, it's going to take a 100% gain to get back to where you were. And that takes time.
I was just going to say, and for people that are in their 30s and 40s, they have a while to retire, maybe okay, but for people that are looking at retirement sort of right around the corner, that's really a dangerous zone.
That's it exactly. And like we were talking last week about sequence of returns risk, if someone, and the example that I used last week was if someone was looking forward to retiring in January of 2020, just the markets, the timing of the markets, which we can't time, the timing of the markets with a drop because of the virus, when they start withdrawing 4 or 5%, in addition to the losses in the market, that has a snowball impact, and it's the potential to actually run out of money in retirement, and that's the biggest fear, longevity risk.
Very scary for a lot of people. And of course, you mentioned starting to build back, but it doesn't seem like we're even there yet. It seems like the losses just continue. So we're not even able to start making up ground yet.
No, it's one day the market's up 160 points on the Dow. The next day, like yesterday, it's down 460 points on the Dow. So and politics are inflaming the situation. The market yesterday was driven by tweets, for lack of a better term, by the president. And you can't control everything that is impacting the market because they fly at you out of nowhere.
And lastly, Davis, we're almost out of time, but I always like to end with sort of your advice for people who are trying to ride out this storm.
Give us a call. We have vehicles, and this is what our office is designed for, to not lose money to the market. The worst case basis is that you have a zero return for the market, but you cannot lose any money to the market. That's what we're all about.
Yeah, sounds like a much safer way to go. Davis, thank you so much for your time this morning.
Thank you, Amy. I appreciate it.
If you would like to get a hold of Davis or you would like more information, you can always contact their office, Preservation Financial Group. You can also check out their website for more.